Now, Bitcoin is forming a massively big pattern directly below 30,000 US dollars, which will knock the socks off of even the biggest bulls once you see this. And with continuing collapse of the banks, this is about to get much bigger than you could ever expect. So sit down, grab your phone, stare at the charts, and text your fellow baby bulls, because we are about to bust big time. Right now, Bitcoin sits firmly below 30,000 US dollars. However, there's a very big short-term pattern forming, and the bust is imminent. We're going to be talking about that, but more importantly, some very key metrics about what exactly is happening and how big this fire is about to get in the economy, the banking crisis, all of this. And specifically, will Bitcoin bust? And if it does bust, how big will it bust? So if you're interested in trading, sign up with the links below to get massive bonuses. In addition, for a limited time, if you sign up with Femex, you can earn up to 10,000 XPT simply by trading if you sign up with the link below, which will then be converted into Femex's exchange token in Q3 of 2023, which could be very valuable. So you can earn up to 10,000 XPT simply by trading if you sign up with the link below to Femex. So it wouldn't be a day in 2023 if we didn't have yet another bank collapsing. Here we have Western Alliance Bank down about between 50 to 60% throughout the day, immediately after opening, as well PacWest getting completely dumped on. At the current time, PacWest is down a little over 40%. Western Alliance is down a little over actually a little over 30% as well at this very second. But again, guys, I mean, I think we know where this story is very likely to go very quickly. I think everyone knows, if you've been paying attention for the past 2 months, what most likely is coming next. And why is this though? Why is this going to happen? So, according to Raoul Powell here on Twitter, the regional banks need to find support in this zone, or we have a very large, potentially extremely large problem indeed on our hands. Let's see what the weekend brings, but without fixing the inverted curve, I don't know what could stop this for a bit, except for an engineered short squeeze. Regional bank ETFs, again, getting crushed here. Here we have most banks, according to David Sachs, most banks have an equity to assets ratio of around 10%, which means if the value of the bank's investments drop more than 10%, it becomes insolvent. It's a very small room for error. What this basically means, too, is that during good times of the economy, a lot of money is made. But when we have these downturns, the system is just very, very fragile, and we're seeing that. But keep in mind, the system is fragile in general. But when we have the most aggressive rate hiking that we've basically ever seen in history of United States history, when we have that going on, the fastest, most aggressive rate hikes we've ever seen, then this just puts so much pressure on these banks and in the money supply in general. Not to mention, again, guys, we just got another rate hike yesterday. I repeat this every video, but it's so important. We haven't even seen half of the effects from the rate hikes from the previous 10 rate hikes. We haven't even seen half of these effects yet because there's a delay. It takes time for the rate hikes to really kind of factor into how the economy is doing, how healthy it is. So we have so much potential for continued banking collapses that it's just unreal. It's unbelievable. Bill Ackman saying that we will continue to see more bank failures and we're running out of time to fix it. At this rate, no regional bank can survive bad news or bad data as a stock price plunge inevitably follows. Bank failures broken down by reason, which I find very interesting here. Silvergate, it was a crypto bank. That's their reason for that. Silicon Valley collapsed because it was a textbook case of mismanagement. This is at least what the Fed is saying. A Signature Bank collapsed because of too rapid of growth. First Republic Bank collapsing because of a highly concentrated customer base. Basically, they're spending a lot of time, the Fed is denying inflation, or they did spend a lot of time denying inflation. And because of this, then they had to catch up and pursue the most aggressive rate hikes in the last 40 years and break these banks. And seriously, if you compare this to 2008, we've already surpassed the sheer amount of capital involved. However, 2008 started slow and then it really just snowballed. And if this is the beginning of this banking collapse, things are going to get so much worse. Now, I personally believe that it is. Do I know for sure? Of course not. Nobody knows for sure. But if it truly is the beginning, then things are about to get much, much, much crazier. And people are going to need a place to park their money. And again, that's one of the reasons that I'm invested in cryptocurrency. But here we have this. Representative Dan Goldman time-selling PacWest perfectly. He sold on 3/6 just a couple of days before the banking crisis began, avoiding the initial drop, but then also the 50% drop we saw over the last 24 hours as well. Guess which district he represents? Wall Street. He represents New York's 10th district. Okay. So again, possible inside trading. It's crazy, right? I mean, it would blow my mind if every one of these representatives did not inside trade, because it's very likely they all do. They get into office, right, and they make what, $400,000 or $500,000 a year salaries, yet their net worth increases by tens of millions. So very often, right? Doesn't really make sense. If somebody's making $400,000 a year, how does their net worth increase millions of dollars per year? Because what they're really making isn't their salaries. They're making money other ways. Is it legal? That's a good question. A credit crunch could more than double the rate that some U.S. companies default on their debts. So, again, the stresses that are building up are insane. They're basically uncountable. There's so many. Peter Schiff himself, also highlighting anyone under the delusion that inflation is coming down needs to look no further than the unexpected 2.7% collapse in Q1 productivity, driven by a much hotter than expected 6.3% surge in unit labor costs. Collapsing productivity means soaring consumer prices and lower real wages. And this is interesting. The U.S. SEC has been ordered by a court to respond to Coinbase's complaint over how it applies securities laws to digital assets, and it says they have to reply within 10 days. Of course, they'll probably find a way to not do that because they absolutely don't respect the law, basically, meaning the SEC. But if we look at Bitcoin on the 2 or 4 hour chart, you can see a very nice consolidation that Bitcoin has been consolidating within for about 3.5 weeks now. Okay, we're in this period where we've seen higher lows, lower highs, and now we're consolidating. And I personally expect this to break sometime within the next 36 hours. But I personally think that it'll be a little bit sooner than then. So absolute potential, massive opportunity for a trade there. We need to wait for confirmation to really see. We're going to be heading into weekend trading in about 24 hours as well. So volatility, we all know how that goes, and that'll absolutely play into that. Bitcoin on the monthly chart looking pretty good, I believe, with the MACD cross. A lot of things set up here for the potential to bust through the bone zone, which is getting above 30K. We've gotten rejected so many times here. This could finally be the pattern that enables us to get above that. This is a 3-week, roughly, long pattern, so it has some time, it has some strength behind it in terms of how big the move could get. A measured move out of here could bring Bitcoin above 32K if we have a successful breakout. But we can't get too excited just for the simple fact we have to understand the resistance levels, where if we kind of you zoom out here, obviously 30K is basically the biggest level of this entire bear market to break. It is where Bitcoin found support the entirety of the bull market. Okay, 30K. And this is our first couple of weeks testing it ever since entering the bear market. So this I don't think this is going to be very easy to break through. But all I know is that if we concretely do break above 30K, it can be very big. Also, remember, we did briefly get above 30K back at the very beginning of April. It was short-lived. I believe, we almost got up to 31K even. I think we might have even hit 31K on some exchanges. But this could be the pattern that sends us there. I believe it will be busting within the next 24 to 36 hours as well, as time runs out for that pattern. And additionally, as we go into weekend trading, if how the banks and how the markets respond to more banks collapsing, because that's truly what we're seeing. How will that play in? Will Bitcoin continue to do well with these banks collapsing? And take advantage of massive bonuses below if you want to trade. Sign up with the link below. Specifically, if you sign up with my Femex link below, simply by signing up, depositing, and trading, you can earn up to 10,000 XPT, which then gets converted into Femex token when it goes live in Q3. Absolutely very big. It's free. It's simply something you accumulate just by simply trading. But without any further ado, that's it for me.